I'm Erica Sprague with Lane Realty, and today I'm here with Sue Gold of Summit Mortgage. Hey, Sue.
Hello.
Happy New Year. We wanted to get together with you and share a little bit of information about mortgages and some of the frequently asked questions that consumers often have when they are preparing to purchase a home. So, Sue, we were chatting, and you shared with me that credit scores are something that people really need to be aware of and have information about. So what, right now in 2025, how are credit scores affecting home buyers?
So credit will impact really two ways. One is getting approved for a loan to begin with. You got to have at least a minimum credit score to even get approved. But probably more importantly is what it does to your interest rate. So the higher your credit score, the better your interest rate's going to be. And that is, there are some things people can do to help bump their credit scores up. So the earlier we talk to someone in the process, the better chance we have of helping build that credit score.
Okay, and so you mentioned a minimum credit score. Is there a minimum credit score for any loan, or is it all the same, or what is that number?
It will vary a little. Kind of the best mark is probably a minimum is 580, but okay. We've got some others. For example, if somebody wants down payment assistance, they're probably going to need to have at least a 620. There are some loans that might have even different than that, but we want to get to at least a minimum 580 to have anything, any options.
All right, that's good to know. So credit score, minimum of 580 at least. And then what about a down payment? There's still a lot of rumors out there that you need 20% regardless of what type of loan you're using. So is that true?
That is not true. We have VA loans and some rural housing USDA loans that have zero down. We have some down payment assistance programs that can help offset, and FHA loans only require 3.5% down. Some conventionals as little as 3%. So definitely we don't need 20%. And I encourage people, don't wait to save up 20%. The sooner you can get in the real estate market, the better.
Right, okay, so that's a very good point. The sooner you can get into the real estate market, the better. We were also talking about how projections for real estate are that appreciation is supposed to be 4 to 4.5% over the next year, and that is healthy for the nation. And so what that means, if the home you like, the neighborhood you want to be in, is increasing in value about 4 to 4.5%, then you waiting for an interest rate to drop, or you waiting to save up a few more $1,000s for your down payment, it's offset by the increase in value of those homes in the neighborhood you're looking at. So what Sue said earlier that I loved is she said, you know, if you find the house you want, move on it, because interest rates change. You can refinance at some point if that makes sense for you, and it's much easier to refinance than it is to buy and sell a home, especially finding that home in low inventory markets where it's hard to find what you want and there's a lot of competition. So, all right, okay. Well, thank you so much. We hope you found this helpful. If you have any finance questions, please reach out to Sue. Her contact information will be at the end. And if you have any real estate questions, I'd love to speak with you as well.